Okay, we're recording.
Hello, hello, ladies and gentlemen. We're so excited from today's guests. So today we have Derrick. Derrick is been trading for a long period of time, and today we're going to be meeting Derrick, and we're going to be diving deep into his philosophies over the market and how he approaches and how he traded the market properly for a long period of time right now. And me and Alan, we're super excited having you here, Derrick. So it's actually a pleasure having you, and thank you for being here.
Awesome. Yeah, I'm happy to be here as well. Thanks for having me.
Sure.
So, Derrick, in few words, would you be able to introduce yourself so our audience will meet you properly? How does it
Sure.
sound
So,
to you?
my name is Derrick Oldensmith. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. It's really a proprietary trading company. All the trades I place are placed through T3 Trading Group or placed through that prop entity. And just real quick for disclosure purposes, nothing I say here should be used as advice for your own trading necessarily. I don't know anyone personally, just here to talk about my story and my approach. And if I find myself talking my book at all, because I am in 16 positions right now as we're having this conversation that I'm actively managing, I'll make sure to let you know, hey, I'm talking my book on this one. I've got a position in it or whatever. But my background, I started trading professionally in 2008. I joined T3 as a prop trader specifically in 2010. So I've been trading with T3 for over 14 years now. I started with the company at the entry level.
Wow.
Yeah, I was just an entry level prop trader focused on equities. And to be honest, I thought at that point that I knew a lot about trading in markets, and it was quite the wake up call to go on to a trading floor with a bunch of other professionals and learn really quickly that I really didn't know very much about anything at that point. So I can attribute everything I've learned about trading to my 14 plus years at this point at T3. But I did take a strong approach to risk management and money management as a brand new trader because I understood that at the end of the day, this is a math game. So I was very disciplined with rules that I created for myself for risk management, and it enabled me to make smaller amounts of money with decent consistency early on. In time, as I learned more and as I thought that was consistent, I worked on adding scale to it. And eventually, what that led to was in 2013, T3 gave me the opportunity to start my own trading desk at their downtown New York City headquarter office. So, in addition to managing my own trading, I've also been managing other traders for over 10 years. That started
Oh
as
my God,
myself. Yep. So they
that's
keep
a
me
hell of
really
a story.
busy. they keep me
You have been
really
busy.
busy.
You have been busy the
Um,
last 16
at,
years, right?
I started with two people. Now I'm directly managing over 100 traders. So
100?
100
uh,
traders.
it's a big team that I'm working with. Really good, diverse backgrounds on that team, diverse trading products and approaches. Some of these guys have decades of experience, and there's me continuing to
Super,
plug away and
super.
trade every
So,
day.
so in advance, Mr. Alden Smith, cheers to you and cheers to your success. Um, super, super happy again having you here. And I want to actually start from the beginning of your story. And I want
One
to
second,
ask
Fleck.
you,
Actually, I have a
yeah,
question.
of course.
How it feels to manage 100 traders? Like, seriously.
Yeah.
It's not
How's
easy.
like
How it is?
how do
It's
you
not
manage?
easy. Um, there was a time when I first started my trading desk, and I had two, and then five, and eventually 10 traders, where I used to sit down at every trader's computer after the market closed, and I would review every single trade that every trader on the team took. And I think it helped a lot. Now that I'm working with 100 people and we're primarily working remotely, it's impossible for me to sit down at every trader station, especially because we got people all around the country, all around the world, even. I can't sit at their station even if I wanted to. And I definitely don't have the time or capacity to review, 100 plus people's trades every day. So I've really worked over the years on developing processes that can be as efficient as possible to help the most amount of people in, I guess, the least amount of time. I also have a bunch of guys that I kind of consider to be my lieutenants, my right hand guys who also help me to work with traders. But I do everything as a group now. We do group meetings, group morning meeting, group afternoon meeting, daily group mentorship session. Because most likely, if you're a new trader and you have a question, well, the other new trader on the team is going to benefit from that answer. So if you answer that question and I answer it publicly in front of everybody, then everyone gets the benefit from that answer, that question, and it just makes my time more efficient.
When I think about like the last three sentences that you have just said, you have mentioned two separate things. You have mentioned that if you have two junior traders, and one of them might have a great question, so the direct answer might benefit another trader. So basically, what I think to myself is um the sense from the Wolf of Wall Street is like going on in my mind right now, and like the entire like show and ego among all the traders and all, like it's a game of money. How do you maintain a collaborative in a collaborative in a productive workspace that enables each and every trader that you have within your trading desk, a safe environment to learn from, and a promise for mutual growth, because without it, I guess that you won't be able to maintain performance over 14 years. And if you are maintaining the same performance, you might have a secret. So please cover your secret.
So trader communication is extremely important. I'm just one person. There's only so much that I can see out there. There's only so many opportunities I can look at. There's only so many stocks I can be looking at once. But if I've got a really strong team of other traders that I'm working with, and they're communicating what they're seeing and they're communicating their ideas at the same time, we're all able to feed off of each other. So I tell everyone as they're first getting started with us that the key to their success is going to be held within their communication. Throw your ideas out there. And you know what? If you're a new trader, you got to have a little bit of thick skin, because I might look at your idea and I might say, your idea sucks. And I don't like it for the following reasons. I would never actually say your idea sucks like that, but I would.
How do you push your trader boundaries? Like, how do you, if their idea sucks, how do you push to their boundaries? Because, as long as you ask them for more, they might learn a lot better from the process itself, and they might appreciate yourself as a leader by the end of the road. So how do you push their boundaries? Because being started with a thick skin and so on, I think will be challenging. So you see, it's more of a management question. So I just want to understand, how do you make sure that they get a stronger and less thicker skin within the road?
How do you lead them, basically?
Sure.
Yeah, how do you
So,
lead them,
so
basically?
at a certain point in this business, this is the trading business, and while we have a really strong team, everyone's success is individual to their own decisions that they're making. So I can't force anyone to do anything, and I'm not going to press the buy or sell button for them. They have to be willing to do that themselves. So if you're going to be successful in this business, you have to be willing to step out of your comfort zone a little bit and be able to communicate. And I can't. That's the thing that's very hard to teach. I can't teach you the personality aspect of being a strong communicator. You just gotta not be nervous and put yourself out there. And the way that we do that is by having a respectful environment, making it, it's a safe space for anyone who is entry level to ask an entry level question, anyone who's experienced to ask an experienced question, and feel comfortable that I might say that this is a bad idea, or I don't like your trade for the following 5 reasons, but I'm not going to say, hey, you're an idiot. How could you be so dumb for bringing this idea to the table? It's not going to be that way. So it's a productive environment where, sometimes we have to give negative feedback, but you do it in a way that is respectful, and you try to couple it with the things that they're doing well at the same time.
Well, that's a really interesting insight about like how to manage a collaborative workspace with a handful of traders. Um, so I want to go a few steps before, because we go one deep from the beginning. I want to explain our audience what is the proprietary trader, and what's a trading desk, and what's going out there?
Sure. So a proprietary trader is someone who has access to basically firm capital to be able to trade with. And there's a couple of different prop trading business models that exist in the space. But the way that T3 functions is that traders will initially post some of their own money as collateral, as what we call a capital contribution to back their starting trading risk. And then they get
How much money,
access to
if I would like to join T3 right now, how much money do I need to have in order to start my journey with T3?
it
Like,
depends a little bit on what products you want to trade and specifically what you're looking to do, but the
mhm,
absolute minimum for an equity trader is $10,000.
mhm.
Generally, we look to work with people a little bit more than that, but the minimum to get started with us, you'll have to fund your account with at least $10,000. And then T3 on the equity side will typically start by providing buying power at 20 times the capital that the trader posted for day trading and 8 times the capital that the trader posted for overnight positions. So someone who did that $10,000 minimum, we basically allocate you $200,000 to trade with, and then we get you up and running. So a prop trader is someone who has access to basically firm resources. That includes capital, technology, the team, the network that we have, and all of that is there to maximize that trader's success. Because the way that the firm makes money is that T3 keeps a percentage of the profits of all the traders that we have on the team at the company.
Sounds good. And let's let's go let's go let's remain on that surface for the moment. So I would like to ask you based on your experience, what is equity? How do you approach the equity market back then when you started, when you just initiate your trading journey, and how do you approach the market right now? What influences the market and how you can make money trading the equity markets?
Sure. So I focus entirely on the US stock market. So equities and ETFs, things that are listed on the New York Stock Exchange, NASDAQ, and Amex. I am almost entirely an equity stock trader. I dabble a little bit in options as well. There's been a long evolution of my trading over the time that I've been doing this, and a lot of that relates to the fact that the market has changed a lot over the 14 years that I've been doing this with T3. When I first got started with T3, I was exclusively a day trader. A lot of shorter term scalping trading opportunities is what I was doing, primarily to the short side, primarily to take advantage of volatility. And it was primarily based off tape reading skills. I was reading the level 2, I was reading the tape, I was identifying buyers and sellers in the tape, and I was trading off of them for short term day trades. Those trading opportunities in the way that I traded back in 2010, 11, 2012, the market started to change in the second half of 2012. Basically, what happened was the individual traders, the human beings that were executing trades for large hedge funds and large institutional money that I used to read in the tape to make money, those guys all lost their jobs and they all became robots. And the robots were much better at disguising how they bought and sold in the market, much better at disguising their order flow. So that traditional, easier tape reading trading that I was doing in the beginning of my career, all of a sudden it didn't work as well anymore. And then all of a sudden I wasn't doing as good anymore. My trading suffered, my P&L suffered, and I kind of had to reinvent myself as a trader. Luckily, I had always been interested in learning as much as I could possibly learn about anything related to markets. So even though when I first got started trading, I didn't do a lot with technical analysis, it was mainly tape reading, I also was learning technical analysis at the same time. And into 2013, I had to change my time frame. My time frame became longer, still day trading, but also starting to take swing positions and holding positions overnight for days, weeks, or even months at a time. And I went from being primarily short focused to being primarily long focused and doing a lot more based on technical analysis. Now, the market's continued to evolve. And now we fast forward to 2024. And my approach is a lot more swing trading focused, where I'm holding positions for days, weeks, and months at a time, but I actively day trade around those core swing positions every single day for cash flow. And the biggest thing that has really changed markets now in the last several years is that the entire structure of the market has changed. Options trading is a much, much larger part of the market than it ever was when I first got started. And that actually changed the way that markets function. So I spent a lot more time now studying market dynamics, studying systematic strategies and positioning of the big funds that are out there and how they're affecting the market on a day-to-day basis, and implementing this data into my trading, combining that with technical analysis, studying the charts to understand risk reward, and still even a little bit once in a while using some tape reading for execution.
So you have mentioned so many things over your answer, and I want to nail down one topic. For now, you have mentioned that the markets continuously evolve over a long period of time, and as you mentioned, the big funds is like their participants in the market is way different than it is nowadays, and like the option market is a completely different game than it was back then in 2010. And I want to ask you, how do you maintain your persistence in the market that makes you profitable each and every single day, and why you have been moving from short exclusively day trading style to be focused on the long term focused on the long term focused approach.
Sure. So, long-term focus is not like I'm investing, I'm still trading, but
Yeah,
I
of course.
found that at a certain point that pure day trading is reward limiting. If I've got a really good day trade on and I close nicely in the money on that, and then I look at the daily chart and I look at the weekly chart, and the weekly chart looks great, the daily chart looks great, and I've already got a nice profit cushion intraday, I'm already up a few percent on that stock or whatever, why not keep a percentage of my position overnight and see if the daily chart reward profile continues to play out? And what's the worst that happens? Worst that happens is the next day the stock goes down and I give back some profit that I've already made, but I still end up making money in the trade. That's the worst case scenario. Unless really bad news happens overnight while the market closes, which can happen, and that's pretty rare, but it can happen. So typically the worst case scenario is I give back some of the money that I've already made, but the best case scenario is that I get a full move on the daily chart, and that daily chart just continues with me. And the way that I've learned to trade now is if I can find risk points to enter trades that are based on like a 5-minute chart or a 15-minute chart, but I can get a reward profile that comes from a daily chart or even a weekly chart. Everyone likes to talk about risk reward ratios, right? I like to risk 1 to make 3. I like to risk 1 to make 10, whatever. I don't do that at all. I understand that if I'm putting risk on that's based on a 5-minute chart, but I can get reward that comes from a daily chart, my risk reward ratios are going to be excellent. It doesn't matter to me if it's 5 times my risk or 100 times my risk, but that's how you can get those overwhelmingly large risk reward ratios, is by willing to hold a percentage of your position overnight and just let that thing continue to run in your favor. And it's not impossible to make 100 to 1 on your risk. It's not impossible to make 1,000 to 1 on your risk if you're willing to hold the position and have rules in place for reward maximization that can get you there.
Wow, that is super and a surprisingly interesting approach to about risk reward ratios. Um, so going back to our discussion about like maintaining your edge in the live markets and so on and so forth, I want to ask you a question, Derek. Um, how do you sharpen your risk management style, and how do you sharpen your risk management approach in the market that literally enables you to have to have an edge over the markets? Because without it, and without like the risk reward ratios discovery that you have just mentioned, you won't be able to remain persistent in the market. Is that correct?
Yeah, absolutely. Risk
So
management is the key to success in this business.
Yeah, so
I don't know.
how do you structure a risk management, and how do you stay agile according to the live markets with your risk management approach that enables you to make money?
Sure. So I'm a really big believer in game plans. I think that one of the keys also to success in trading is to have a very strong game plan for every trade that you take before you get into it, and then to follow that game plan with the utmost discipline. And your game plan will include the risk management aspect of a game plan and the reward maximization aspect of the game plan. Those are the two key components. What am I doing to limit my risk if my idea is failing, if my trade is failing? And what am I doing to maximize my reward if that trade is actually working out? And then I have to follow it. And again, that needs to be preset before you get in the trade. One of the things, being a human being, we can have very bad psychology when we're already in trades because you see the P&L moving. Yeah, oh my God, the position's against me. Oh, hooray, the position's in my favor. You get all these emotions when you're seeing your P&L move. And if you're trying to make decisions when your emotions are strong because you're seeing your P&L move and you're seeing your trade work and fail, it leads to bad decisions. So you want to make those decisions before you're even in the trade. Before I press the buy button, I want to know exactly where my stop loss is or how I'm managing risk on this. And
But how
also,
do you can predict it? How do you can place your stop loss even before entering trade? Because that doesn't make any sense to me, at
so
least right now.
every type of trade that you get into will have so let's take a step back.
All right.
What is a trade? That's the first question you have to ask yourself. What actually is a trade? I'll give you my definition. My definition of a trade is something that has a reason, like a technical reason. Why do you think you can make money by doing this? And it also has what we call an out, which that's another term basically for stop loss, which is before I even get into it. So I need to know, what is my reason? Why am I buying the stock here? Why am I buying the NASDAQ here? Why am I buying the S&P here? Why do I think it's going to go higher? But also, where does the market tell me that my idea is wrong? Because the market will tell you, all right, if it goes down below this price, I know that my idea was wrong and I'm stopping myself out. So that's the definition of what a trade is. So inherently, if you are a trader, everything that you're doing in regards to the market is going to meet that definition. If you're getting involved in a trade and you don't have a reason why you think you can make money, that's called gambling. If you're getting involved in a trade and you don't know where your idea is being proven wrong and therefore where you need to take your loss, that's called gambling. And there's a very fine line in the market between being a professional trader who is more like a casino. The professional trader will not make money in every trade, will not make money every day. I don't make money every day. I make more than I lose most of the time, but I do not make money every day, right? And it's because I'm positioning myself to be the casino. The casino knows that they're not going to win every card game that's on the floor or every game of roulette that's going on their floor, but they know that the probabilities work out for them in the long run. That's exactly what a trader is. So I need to know before I even enter this position what my trade is. Why do I think I can make money and where I'm going to get out if I'm wrong? And the where I'm going to get out if I'm wrong is the game plan portion of risk management.
Oh, wow. The most nailed down explanation that I have ever get from a trader that explains briefly about risk management and what actually risk management is. So I want to dive into risk management and more about the definition. Let's hypothetically say that I being a trader, a junior trader with T3, and I want to sharpen my risk management style. And for now, I position my risk to a road, in the same time frame. How do I evolve over time with my risk management style, and how do I make sure that I'm able to make as much as money as possible over a long term running with the same risk management, with not the same, with an agile risk management plan? Like
Sure.
hypothetically
So
speaking, if I'm a new trader within your desk.
Yeah. So the first thing I'm going to do is I'm going to tell you to keep really strong journals on your trading. Record everything you do, write down everything you do, keep really good records of all of your trading. And then what you want to do is you want everything to be
Is it
fairly
is it is
uniform.
it work? Does it work
Yeah, absolutely. Absolutely. Trading is a
to
performance-based
journal every
activity.
day? All right, if I journal every trade, looking back 1 year of journaling every trade, each and every trade that I
How do
took,
you analyze it?
yeah,
How do you
how do
what?
you
How do you analyze it afterward?
Sure. So the key to being so what is the goal of a trader? The goal of a trader is to be consistently profitable. That's the goal, right? Well, the only way that you can be consistently profitable as a trader is if you are consistent in your approach to markets. So one of the things that you're doing as you're journaling is you're reviewing your decision making and you're reviewing your consistency. Did I do everything right? Was I consistent with my trading? And then you are developing an approach for yourself over time. Oh, this works, this doesn't work. And again, it has to be over time. A common mistake that new traders make when they're first getting started is they see the result of one trade and they think that that's the key to everything. And it's not that way. Because again, we work in a game of probabilities. So inherently, when you're working in a game of probabilities, it means that sometimes you will do everything right and lose money. And sometimes you can do everything wrong and make money. So you can't get confused. You took one trade, you did everything wrong, but you happen to make money on it because you got lucky. And then you think that everything that you did, which was actually wrong, is right, right? That's a problem. So you have to go in and keep really strong records of your trading to analyze not just one trade, but days, weeks, months, years of trades. And then by doing that, you can begin to develop the process because it's having a process and implementing that process consistently to the market that actually creates consistent profitability. So journaling is extremely important in this business. And think about what type of business trading is. Trading is a performance-based activity. It's very similar to sports. Sports are performance-based activities. If you are a tennis player and you go out on the tennis court, your decisions as a tennis player are going to determine whether or not you win that match. When you are a trader, you are going out into the market. It is your decisions in regards to the market that are going to determine whether or not you win that match, which just means whether or not you made money or whether or not you lost money over the course of a day's worth of trading. So it's a performance based activity. And what do the top athletes in the world do? They keep journals. Kobe Bryant, best basketball player, him or Michael Jordan of all time. And what did Kobe do? Kobe kept journals on his games, on his practices. He would go back, he would review his journals. He would look at what he did well and what he did poorly so they could be better for the next game. If it's good enough for Kobe in basketball, it's good enough for me in trading to be able to go back and review what I'm doing well and what I'm doing poorly to make the right adjustments for continued and better success over time.
wow. Wow, I'm actually super passionate about the discussion with you. And I want to ask you another question. How would you educate a junior trader within the right path that promises, there is not a promise within a role of training, but how do you make sure that you educate him right and everything you do is properly prepared for him that will drive success over the course of his career. How do you educate them? How do you start the journey? How do you make sure that they're learning the right things? How do you make sure that they embrace the right attitudes and the right behaviors? And how do you make sure that they're going to be remaining consistent within the game of trading? Because this is not easy as we speak right now. This is a journey. There are a ton of difficulties over time, and I want you to highlight this to the audience so they'll be able to understand it properly. So I want you to replicate how do you take how do you take a junior and you educate it towards success.
Sure. So you said it perfectly. Trading is a very difficult business, and unfortunately, not everyone who pursues it will be successful because they're making all their own choices and all their own decisions. So success is really heavily on the shoulders of that trader, him or herself. So I can't guarantee anyone's success, but I feel extremely confident that any trader that I work with will at a minimum learn a ton. And that's because I've developed a very strong infrastructure to help traders for training and development. So when I first get a trader, the first thing I do is I give them access to my training program classes. So I have a series of about 15 video lectures I put together. Each class is over an hour long. And the idea behind that is to give the trader a foundational approach for markets. Let me tell you, you're not going to watch my 15 classes and go make $1 billion in the market on day 16. It's just not going to work that way. I wish it
Can I
was
watch
that
them? Can I watch them?
we'll absolutely give you access, but you're not going to watch them and go make $1 billion the next day. It does not work that way.
Why? Why do you think? Why do you think that I won't be able to make $1 billion out a day?
Because trading is so dynamic and nuanced that you need to couple a lot of like classroom style lessons, which I can provide in video lectures with actual
How do you
experience.
put things into practice? Like I learned trading from like dozens of different mentors. Honestly speaking, right now with you, because this is we have a variety of offerings in that space, and I went to dozens of mentors before once I began my trading journey as a trader and as a CEO of a trading company. But right now, when I look back, I tell myself, all right, the most difficult aspect that I've been stuck with is actually taking the class that I took and putting it down into practice onto the graphs. I want to understand how to trade because there is a way difference between the class itself and how things are happening in the real on the graph itself. So how do you put things into practice?
Yeah, so a lot is just doing. To be honest, you have to get out there and do it. There are definitely techniques that you can utilize to get yourself through the learning curve faster. Like we were saying before, trading is a performance-based activity. So how do you become good at any performance-based activity? How do you become good at any sport? You practice, right? You want to be the best basketball player in the world. You want to be that next Kobe Bryant. You got to get out on the court and shoot and shoot and shoot. Well, the problem is the market's only open for a set amount of hours per day. And I can't just go take practice shots, really. I mean, you could use a demo account, but I don't think that demo accounts actually really provide traders with a lot of practical experience because
why is that? Why is that? Because like it's the same environment.
Yeah, but the money's not real, and whether it's conscious or unconscious, when the money's not real, you do things differently than you would if the money was actually real. That's one. Yeah. And two is I've never really seen a perfect demo. The demos are always a little bit off in terms of fills and getting your bids and offers hit and taken and things like that. I've never seen like a demo that was really able to perfectly replicate the market. It can get pretty close, but there's always going to be some differences. But the number one thing is the psychology aspect of it. When the money and the numbers are moving, you just act differently than you would otherwise. You're on a demo account and you're at a spot where you'd be getting a margin call. Well, there's no margin call. It's fake money. So just buy more or sell more or do whatever you want, right? But all of a sudden you might find yourself in a situation with the actual trading account where you can't buy more even if you wanted to because you don't have that capital access anymore or whatever the circumstance actually is. So you can get a little bit of experience initially from a demo account, but I feel like that's just good for learning the software that you want to utilize. And then you got to be doing it with real money, even if you're doing it very small. But again, how do you become good at trading? You become good at trading through practice. And unfortunately, the market's only open for a set period of time. And every time you press the buy or sell button, you're risking money. So there's other practices that you can do to get yourself more experience faster. If, I'm a stock trader. So here in New York, the market's open from 9:30 to 4. If I log into my computer at 9:28 a.m. and 2 minutes before the market is going to open, and I turn my computer off at 2 minutes after 4 every day, the second the market closes, I'm doing myself a disservice. A lot of people like to get on YouTube and talk about how, I only trade 15 minutes a day and I'm a billionaire or whatever. I think that's all nonsense. It's all ridiculous. This is a business that requires very, very hard work. So what should you do when the market closes? Instead of turning off your computer, you should review every single trade that you took for your journal. And if you do that, you're getting a second experience of that trade. And then you should find a partner. And you should review every trade that you took with your partner, and your partner can review every trade that he or she took with you. And then you got a third experience of that trade. And then if you have a good group that you're working with, you can maybe ask a question about a trade that you took with that group. That's a fourth experience of that trade. Then you can use visualization and meditation exercises to be able to get a fifth experience of that trade. Now, all of a sudden, it turned 1 day's worth of experience into a week's worth of experience. It's not as good as actually placing a new trade, but it's going to accelerate you through that learning curve much faster than you would otherwise. So it's definitely a big thing that I emphasize. You got to work hard. When I first started as a trader, I was the first person to get to the office and I was the last person to leave every day. I put at least 12 hours in every single day. And then when the weekend would come around, I would spend another 8 or 10 hours analyzing my entire previous week's worth of trades, everything I did, keeping more journals, going through statistics, figuring out what I need to change, what I can do better, what I did a good job of that I should continue to do. All that work I put in very, very early in my career. And now it pays dividends. Now I'm 14 years in, and I'm very honest, I don't journal anymore. I haven't journaled in at least 5 years, but I'm at the point where my process is so systematic that you probably don't even realize that I've put on about 15 trade executions since we've been talking so far.
Wow. Wow. So right now, I want to slide onto a different topic. By the way, a great insight. I wanted to highlight that was a great insight, by the way, Derrick. Step aside onto a different topic. I want to ask you, how do you see the performance of the large funds? Because you have mentioned that you're an order flow trader. And as a being an order flow trader, you're exposed to the entire orders that are flowing within the market each and every single time. And I would like to ask you, how would you target the participants of the large institutions within the market itself, and how it impacts your understanding and your and your game plan at the continuance of your day trading session?
Sure. So trading is the study of supply and demand in the market, right? That's what we're doing. The definition of technical analysis is the study of supply and demand in the market. You're sitting there and you're trying to identify buying and selling in the market. And what really moves the market more than anything is institutions. So when I first got started trading, what I was telling you earlier, when I first got started trading, the institutions were using human beings to execute their trades. So I could see their trades pop up right in the level 2, right in front of me. Oh, here's someone who's going to buy, 250,000 shares of XYZ stock. And I could see that information. I could utilize that information. That doesn't exist in the same way anymore. It's all robots that disguise it. They're using dark pools. They're using hidden orders. They're using refreshing orders. They make it much more difficult to identify that. But the interesting part now is that a lot of the funds that exist are systematic funds. You still have discretionary long short funds, but you have a lot more systematic funds. Systematic funds are rules-based funds. So there's no discretion, there's no emotion in how they trade. It's entirely based on the rules. So I'll give you an example. There's a subset of systematic funds that are volatility funds.
So
and
this is algo trading funds. Those are algo trading funds.
These are algo trading funds.
Yeah,
so
I
as an
just wanted
example,
to make sure that we're all aligned on the same topic.
Yep, absolutely. So as an example, there is a type of systematic funds out there. There's several of them, but what they compromise what we call vol control funds, basically. So they are increasing and decreasing leverage and exposure to the market entirely based on realized volatility. So based on realized volatility and to some degree what the VIX is doing. So if you remember, about 3 weeks ago, there was a crazy market meltdown globally, right? Japan was down 12%, South Korea was down a ton, the US equity market was down huge, the VIX was up to 65. So in that circumstance, there is a lot of forced selling that has to come in based on these rules-based systematic strategies that are toggling their exposure to the market based on volatility. Volatility jumps through the roof, they need to take down their exposure. Well, what's happened since that? The VIX went to 65, and now the VIX is all the way back down to 16, and the market's gone steadily up. And as that VIX is moving down and moving down, those vol control funds need to systematically be regaining exposure and buying more stock. And you can learn to understand where these trigger points are in the market at certain price levels, at certain volatility levels, that will force those funds to have to buy or have to sell. And now these funds are, managing billions and hundreds of billions of dollars. So if you hit a trigger point in the market where they all have to sell, well, that's not going to be, a quick little downtick in the market and then we immediately come back up. That's potentially several full days of selling. And what does that look like in a chart? It looks like in the chart is a downtrend. And we know markets work in feedback cycles. Selling leads to more selling. So if I can have an understanding of where these points are in the marketplace, and then I can say, okay, wow, the S&P is getting down to the price that if it triggers through this price, it's going to force certain systematic funds to then become sellers. That's a tremendous amount of information, right? So that is kind of the evolution of, well, back 15 years ago, I used to just be able to look at the level 2 and see that there was someone there to buy 250,000 shares of whatever stock. Now here in 2024, I can't see that, but I know that because these funds are systematic, because they're using API and robots to trade, that there are just trigger levels where they're going to be forced to consistently buy or sell on the VWAP or on the moving average or whatever. And I could say, wow, this just triggered. I'm just gonna short sell and ride that trend down and ride that trend down until the data shows me that the information has changed.
All right. Basically, I just want to ask you a few other questions about algo trading. What is your experience with algo trading? How do you approach algo trading in the first place? And if you use algo trading in your day-to-day job, because that's literally 94.3% of the markets, of the market's volatility and liquidity. So how do you approach it in the first place? And yeah, please tell us your perspective about algo trading, about how to make algo trading the right way.
Sure. So I don't personally trade using any algorithms. I personally trade entirely discretionary, buying and selling, pressing the buttons. The firm that I work for, T3, has a very strong algorithmic presence. And I personally have a quantitative strategy that I implement into trading that could easily be just turned into a robot. But I sit here in front of the computer all day, every day anyway. And I don't have a coding background. I don't know how to code. I could hire someone to code for me, but again, I'm in front of the computer all day, every day anyway. So I just take my quantitative strategy and I implement it manually into the market. Algorithmic trading is great. It's a very large percentage of what the market does. And there are upsides and downsides to it, honestly. The upside to algorithmic trading is that the algorithm is only going to do exactly what you program it to do. The downside of algorithmic trading is that the algorithm is only going to do what you program it to do. What do I mean by that? So the upside is that there's no emotions, right? There's no, what I was saying before, you're watching your P&L.
There's no human to trade the markets.
You're not going to get
only
scared.
algorithms. Only algorithms.
You're not going to get scared and head out of all your positions or anything like that. But the downside is that they're slow to adjust. So if the market, for some reason, changes very rapidly, which happens sometimes, and that algorithm, which was working great in the previous market environment, all of a sudden doesn't work in the new market environment, you have to take it offline figure out what changed with the market, figure out what adjustments you need to make to the strategy, or if it needs to be a new strategy entirely, and then recode and reprogram the new strategy, and then you can implement it. There's a big time lag there. Whereas for me, I can just recognize that something changed and just buy or sell as I need to. I remember very specifically, to give you a case point, August 24th, 2015. August 24th, 2015. There was a market crash, actually very similar to the one that we had earlier this month. There was a market crash that was related to the Chinese yuan. This time it was the Japanese yen. That time it was the Chinese yuan. So it was actually a very similar situation to what we just saw earlier in this August. The market had this insane crash, crashed all the way down. It was a positioning related crash. And then that was the bottom for the year. That morning at the open was the bottom for the year, and the market went all the way up. And I remember seeing a statistic after that the people, I shouldn't call them people, but the ones that sold the market at the bottom of that mini crash crisis that we had in 2015 were all algorithms. And I remember when the market first opened, there was insane panic for about 3 minutes. The market dropped faster than I've ever seen it drop for 3 minutes. And then that was the bottom for the entire year, and we went all the way up. The market dropped that fast for those 3 minutes because all the algorithms went crazy and sold all their positions. I envision it in my head as almost like there's a red emergency switch that got pressed by the algorithm that just said, oh my God, this is crazy, sell everything. And they sold everything. And then you had people like me and even retail money, which has always traditionally been the dumb money. Human beings were actually the buyers that day because they just looked at it and they said, this doesn't make any sense. The market doesn't belong here. I'm buying this. This is a great discounted price that I'm able to get for this, really good company or whatever. So you had all the algorithms sell the low for the year in 2015. And then you had all the human beings come in and buy the low for the year for 2015. So the point is that being a human being has advantages and disadvantages. Being an algorithm has advantages and disadvantages. You need to know what your advantages and disadvantages are as a trader. So when you're approaching the market, you can compete. I'm not trying to hyper scalp the market where I'm going to compete with a robot that can trade faster than the human eye can blink. I don't have an advantage. But if I have a little bit longer of a day trading time frame or a swing trading time frame, that microsecond doesn't matter in the same way, and I can compete just fine.
What if I will tell you that we're able to to have a perfect congruence between aligning algorithms with human intuition? How do you feel about that? Will be a thing that might catch your interest?
Sure, yeah, I'd love to learn more.
All right. So we'll be discussing about that topic after the recording session. So one last question, Derek. I want to ask you, how do you see yourself in the next 5 years? Where do you plan on being? What are your plans, and what do you see that's been the right move for you and for your personality as a trader to move on to enrich your career and obviously to be more successful with yourself?
Sure. So I really like the path that I'm on right now. I'm just continuing to get bigger and bigger and bigger as a trader. When I first got started trading, making and losing a few $100s felt like so much money to me. And now, if I'm in between $10,000 up and $10,000 down on my day, it feels like nothing has happened. So I'm working on continuing to get bigger and bigger as a trader over time. And then the other aspect of it, and this really came about through COVID, but I'm just going to continue this, is just taking advantage of life itself and the freedoms that I have by being involved in this career. When I first started as a prop trader with T3, I had to go to the office 5 days a week. So I was in the office 5 days a week for 10 years. But post-COVID, we've transitioned to a model that is entirely remote for our traders. So now you can be located anywhere in the United States, anywhere in the world, and you can get access to a system that we created, which is called our virtual trading floor, that we use now instead of the old physical trading floor. We use a virtual trading floor. And the cool part about that is it lets me work from anywhere in the world. You know, I spent all of June in Europe, and I worked in Europe for that month. I'm leaving on Friday of this week to go to Japan. So I'm just enjoying my life and traveling around and doing what I love doing, which is trading. I love markets. I love studying this. I love figuring out the puzzle every day of what the market's presenting to me and how I can apply my game plans to it to be able to make money.
No, I got incredibly inspired by our conversation today, and I want to thank
Actually,
you
I
for your
have
participation.
one
Yeah,
second,
yeah, of
Vivek. I
course, of
just
course, of
have
course, of course.
one last question. How do
Yeah.
you celebrate success? How?
So a very wise, experienced trader one time told me not to celebrate success, to only celebrate failure in this business, because success is what we're supposed to be doing. We're supposed to be making money. So if I had a great day today and I made a lot of money, there's nothing to celebrate. That's my job. That's what I'm supposed to do. But that trader told me if you have a really bad day, if you lose a lot of money, if you made mistakes, if you're really upset with yourself, that's the day that you should go out and treat yourself. That's the day where you should go out to that really nice restaurant that you wanted to go, or buy yourself that watch that you wanted to buy yourself, whatever it is. Treat yourself on those down days so that you can just go back in with a sharp focus on the markets and then do things right. And then you don't celebrate making money. That's just what you do.
Yeah, that's a good
That's
one.
a brilliant insight. A brilliant insight to celebrating your failures. Alan, I think that that should be the title of the podcast. You should be celebrating your failures in order to be successful in the game of trading. So
Love it.
again, Derek, I would like to thank you personally, and we would like to thank you for your presence here today. I, I got inspired from our conversation, and I believe that our audience will have great time listening to our conversation today. And obviously, we'll be planning a part B with you after we'll have more and more questions about that we need to address to address up to yourself, and we would love to have another episode with you. Um, so again, Derek, I want to thank you. I appreciate your time and your presence here today,
Man, it
and
was a pleasure. Thank you.
yeah, I just wanted to say thank you.
Thanks for having me, guys. I really appreciate it.
Thank you.